Okay, let's dive into this. You ever look at a stock chart and it just looks like, well, a totally random, jagged line? What if I told you that line is actually a language? Today, we're going to learn the basics of how to read it, and it's called technical analysis. And really, this is what it's all about. These charts are constantly telling a story about the battle between buyers and sellers, about fear and about greed. Our job is just to learn how to listen in. That's the million-dollar question, right? What is all this movement, all this noise, trying to tell us about where the price might be headed next? Well, the answer starts with just a few basic but really powerful ideas. At its heart, technical analysis is built on one simple belief. History tends to repeat itself. Why? Because it all comes down to human psychology. Our collective reactions, fear and greed, they don't really change. So we tend to react in similar ways to similar situations, and that creates patterns. If we can spot these patterns from the past, we get a pretty good clue about what might happen in the future. So let's learn our first words in this new language. The absolute most fundamental concepts are called support and resistance. Seriously, these are the building blocks that frame pretty much all of the price action you'll ever see. First up is support. This is basically a price zone where buyers have historically shown up ready to go. Think of it like a bargain level. When the price drops to this point, a bunch of people see value and start buying, and that wave of buying can overwhelm the sellers and put a floor under the price. Yep, the easiest way to remember this is to just think of support as a price floor. Price comes down, hits that floor, and has a high probability of bouncing right back up. Simple as that. And, you guessed it, on the flip side we have resistance. This is a price zone where the sellers tend to take control. Maybe they're taking profits. Maybe they think the price is just too high. Whatever the reason, their selling pressure starts to overwhelm the buyers, creating a kind of ceiling that pushes the price back down. That's right. If support is the floor, resistance is the ceiling. Price moves up, bonks its head on that ceiling, and more often than not, gets pushed back down. So when you look at them side by side, you can really see that constant tug of war between buyers and sellers. Support is where the buyers, or the bulls, build their fortress, and resistance is where the sellers, the bears, make their stand. The entire story you see on a chart plays out between these two key levels. Okay, so now that we've got our floor and our ceiling, we can start looking at the overall direction the price is moving inside that room. This direction, that's what we call the trend. You've probably heard this one before. It's one of the oldest sayings in trading, for a very good reason. Fighting the trend is like trying to swim against a really strong current. I mean, you can try, but it's exhausting, and you're probably not going to get very far. It's way easier, and usually way more profitable, to just figure out which way the current is flowing and ride it. So how do you actually spot an uptrend? It's super simple. You're just looking for a pattern that looks like it's walking up a flight of stairs. The price makes a new high, then it pulls back a little bit to a low that's higher than the last one, and then it pushes up to an even higher high. That stair-step pattern, that's a healthy uptrend. A downtrend is just the exact opposite. It looks like the price is walking down a staircase. It'll make a new low, bounce back up a bit to a high that's lower than the previous one, and then fall again to an even lower low. Putting them side by side really makes it pop, doesn't it? You've got the upward staircase of an uptrend versus the downward staircase of a downtrend. Honestly, just being able to tell which way the stairs are going is the first and maybe the most important step to making a smart decision. All right, this is where it gets really fun. We have our levels, the floor, and the ceiling, and we have our direction, the trend. When we start to combine these things, we begin to see patterns emerge. And these patterns, they're like full sentences that can warn us that the story might be about to change. Let's look at a classic, the double top. This pattern tells a story of exhaustion. The price rallies up to a resistance ceiling and gets smacked back down. But the buyers, they give it one more shot. They try to push through again, but they fail at that exact same ceiling. That second failure is a huge red flag. It's a powerful signal that the sellers are taking over and the uptrend could be finished. And the double bottom, well, it tells the complete opposite story. The price is falling, it hits that support floor, and gets a nice bounce. The sellers try to push it down through that floor one more time, but they can't. The buyers hold the line. That failure to make a new low is a really strong sign that the downtrend is running out of gas and a reversal to the upside might be about to kick off. Now here's the key thing to remember. These aren't just some random shapes we're looking for. They are literally pictures of a shift in market psychology.
They show us when the balance of power between buyers and sellers is changing, and that's exactly why pro traders pay so much attention to them. They're a core part of the market's language.
Okay, so let's wrap this all up. We've learned a few individual words, but now we can see how they all come together to form a complete story right there on the chart. Think of this as the grammar of the market. Support and resistance are your nouns. They're the key places. The trend is your verb. It's the action, the direction. And the patterns? Well, those are the full sentences that tell you a story about a potential plot twist. If you can master this basic grammar, you can start to actually read the charts. At the end of the day, this isn't about having a crystal ball to predict the future. Not at all. It's about listening to the story the market is telling you right now and using that story to make smarter, more informed decisions. The language is right there on the chart. Now it's your turn to listen.